My name is Markus Solibieda. I'm the managing director of BASF Venture Capital, and I would like to first introduce BASF Venture Capital, maybe 7 or 8 slides very quickly, and then jump to one very busy slide and spend a little bit more time on that. Maybe to start with us, who is BASF Venture Capital? This is our mission statement that we have put out, not just to the public, but also internally to the organization. So we want to drive change. We deal with the disruptive stuff, with the transformative stuff. BASF Venture Capital already has been founded in 2001. So one of the older, more established corporate venture capital entities in Germany. And we have an evergreen fund of 250 million, which doesn't seem so much, and of course could be more and should be more if you ask me. But the good news is this is an evergreen fund, so we don't have to pay back the money. Any funds that we are generating from exits can be reinvested. And since we are making profits, since we are earning more money than we are spending, we basically have no limits currently. So that's the basis of that. We are investing 1 to 5 million in an initial tickets. Typically in the past we would have said that Series A and B, but I think I'm just about currently in the process where I say, well, probably that's no longer realistic. With 1 to 5 million euro ticket, you can, if you're lucky, participate in a later stage seed financing round. But Series A basically is out of scope, and B we have done with smaller tickets as well. But more realistically, that will change. And I'm also looking forward to my next board meeting at BASF, where basically I will bring that topic forward in terms of what kind of tickets can we invest and do we want to invest, and do we still position ourselves as a Series A investor, or do we have to change that in order to be more early stage in what we are doing? Of course, we do minority shares. We like to invest alongside other corporate VCs, financial VCs, and we do that with a team of 16 colleagues around the globe, and this is where they are. So for us, there's still Ludwigshafen on this map. It shouldn't be, because we just got rid of our office in Ludwigshafen. I don't know if anyone ever was there, but it's not a very pretty city. So we're all happy that one of the effects of the pandemic was to leave this office behind us. Just checking in after 2 years of the pandemic, we came to the conclusion we don't need an office anymore. We don't need to meet as a team, as we are a global team anyhow. We need to connect via Zoom or WebEx or Teams, and so there's no point that just the German team moves to Ludwigshafen or travels to Ludwigshafen 5 days a week. So we have a small satellite office now in Berlin, which I found more relevant for what we are doing, and so this is how we are, let's say, based. In Europe, we have one colleague who's based in Copenhagen, but from there he's also covering the Nordic region, including Helsinki, Oslo, and Stockholm. Important for us in the last 5 years was our activity in China. I'm talking in the past tense here. Hopefully that will not be, let's say, the wording moving forward. But of course, what's happening in China right now is very difficult. I'm a great fan of the startup ecosystem in China. We have invested quite heavily in that region. Great dynamics. But what has been happening around the lockdown of not just Shanghai, but basically 80 of the 100 biggest cities in China have a similar lockdown regime like you have seen and we hear about Shanghai. So this is really not helpful. And so if you ask me, we do around 10 to 12 deals a year. Do I want to do the next 3 or 4 deals in China this year? Probably not. So we have some in our pipeline, and it's very difficult to, let's say, step on the brake and tell our local colleagues, don't do it. But right now, it's of course very difficult to judge where China is going, because the main assumption that China will always put the economy first and wealth and growth of the economy always has top priority. This assumption no longer holds true if you look at the current political developments. On that background, India becomes more interesting, and also Mark, I would confirm what you have been finding in terms of speed of the growth of the ecosystems. I spent last month 2 weeks in India. We will probably do, out of the 10 to 12 investments this year, certainly at least 3 in India. And the reason for that is simply the quality of the talent that we are finding there. And this quality of the talent in India currently is paired also with a lot of venture activity, very high profile venture capitalists who move into India, who have been there, moved out again, now are coming back. So that would be probably my recommendation for Intel. If they ask where should we put our number 4 innovation hub, probably I would recommend to them to go to Hyderabad or to Bangalore. So although you also have some bubble effects or heating up of the ecosystem, I learned that in Bangalore, as a software engineer, if you have the right qualification, you can already earn $250,000 per year. So it's the old model that India has been the workbench of the world for IT services, for outsourced IT activities is no longer true. They have their own innovation, their own business models, and they are quite successful in creating and growing these business models. South America is important for us because there's a large ecosystem around the agricultural sector, which is 10 billion euro revenues out of the 75 that BASF is doing. And then North America, of course, always has been an area of interest for us. Besides Europe, of course, where's our traditional home base. So where are we investing? We have certainly shifted our investment focus towards sustainability. While this was, to be honest, still 3 or 4 years ago, difficult to sell internally investment cases which were, let's say, focusing on the element of sustainability. Today, it's what triggers interest in the organization and is the type of companies our corporate colleagues want to work with. We all have, of course, very ambitious sustainability goals in terms of mitigating the CO2 exposure, and also to work towards a more circular economy. In the case of BASF, that is circular plastic economy, that where we are a big supplier, of course, packaging industry, packaging material. So these 2 areas are at the core of our efforts. And I also would count AgTech as a part of that. So agricultural technologies, precision ag is for me one of the main driver how we can create a better world and how, let's say, we need to transform existing business models. I mentioned before BASF, 10 billion out of the 75 billion euro revenues that we do with crop protection products. And in the past, the incentive or the mindset of the business was always to sell as much as possible. Sell more herbicides, sell more insecticides, try to sell more fungicides. This is, of course, not sustainable, but this is still how many organizations are working. So you try to innovate in order to find new customers, move into new regions, and so on. But we very strongly believe in precision agriculture, where you collect data, for example, from satellites or from drones, and you make informed decisions where and when and how much to spray, and reducing the necessary input of crop protection products sometimes by 70 to 80%, and which is of course not helpful for the core business model of BASF. But I think I need a drink. Thank you. But this is, of course, where venture capital, corporate venture capital kicks in order to start a transformation. We are testing these new business models. Is it possible to sell to a farmer who is growing soybean on an 8,000 hectare field in Brazil, and who is used to be our customer, and we sell him 8,000 liters of herbicides every year? Is he willing to switch to a business model where he pays us maybe $50 per hectare per year for having no weeds on his field? Is it this kind of service-oriented model? Is it working? And what is our role here? Are we the ones who will organize everything? Do we still have the customer contact, or are we just selling a more sophisticated herbicide to that new kind of solution and business model? This is, of course, what is triggered by corporate venture capital. So AgTech, precision ag is very important for us. New materials, everyone speaks about the battery space, which is, of course, very important and interesting for us as well. So I leave it here. The big topics, of course, for BASF, like for most companies, besides sustainability, the other big topic is is digitalization, and so we are working along these lines. We also can do fund investments that we typically do in order to start off in a region where we are not yet so familiar with the local ecosystem. So we have done fund investments in India, in Brazil, a few years ago in China, but we're also testing new, let's say, investment styles by, for example, becoming an investor in a very early stage fund like Alchemist in the Silicon Valley, in order to understand if we meet companies much more early than at their Series A stage, is it something that could be interesting for us? Can we already engage, and maybe we can come in at valuations which are still reasonable? So just one or two examples of I won't speak about these case studies, but just to drop a few names about investments that we are doing. So synthetic biology, CO2 mitigation, precision ag, these are the topics. So now I'm coming to the busy slide, which is basically the topic of my speech for the next 15 minutes, I think. What I would like to talk about is let's say strategy or corporate venture capital, and the strategic framework that you are setting for your corporate venture capital unit. And what I find in practice, that when it comes to corporate venture capital, there's one question that always will be asked: are you more a financial investor or are you a strategic investor? And I don't think that this question really captures everything. I think it's much more complicated. In the end, the question is not are you a strategic investor, but the question is, what is your strategy? Why are you doing corporate venture capital? And the financial element, of course, is important. As a factor, you will always do better in boardroom discussions when you can actually show that you are having a positive performance with your venture activities. So I think that's there's nobody here in the room who will actually go to a boardroom and say, well, let's do corporate venture capital, but I will I will promise you that we will lose money, right? It's, I think, a bad proposition, right? So, and the good news is the general tide has risen over the last few years. So you must have made some big mistakes by building your portfolio if you're not in let's say on the positive side with your performance. So what kind of strategies have I personally seen? And this is not scientific and not research as previous speakers have done. This is just a personal observation, Markus Solibieda talking to other corporate venture capitalists and traveling around in the world a little bit. So what I still find sometimes is in corporate venture capital, the first one is defensive. I would call it defensive passive approach, that people say, yes, we want to have a corporate venture unit just to understand what's happening out there. We just see that there's technology trends which could have an effect of on our business, and we have this little group and they should engage with startups just to tell us, is there any risk? Is there something we don't see? So we learn and understand better what's out there. But we don't really, beside that, there's not much. So more like a window on technology. You could also send out a scout, technology scout. But this is still something here and there I have heard, even in recent years, where they say, yeah, it's kind of a watch out for us not to miss on the most important technology trends. And these people in our corporate venture unit, they receive all these business plans from the startups. They study these startups, and then we make sure we don't miss anything. Building on that a little bit more active would be to say, okay, we understand there are some business models who are a potential threat to our business. Now let's invest in the most dangerous ones and to understand if this is something that really has potential. So actually investing in your worst enemies, kind of a hedge to your existing business, is a strategy which I don't see too often, but I have seen some companies who actually do that. And you can imagine these people are not sitting with the other guys from the corporate headquarters, because they are not so well regarded, taking the money the others earn and investing it in the worst enemies of the corporate. But I've seen in the UK 2 companies who are actually doing exactly that. And so that's, for what I find, kind of an interesting approach. Then what you see very, very often still is what I would say corporate venture capital as a means or as a tool to optimize internal processes. Of course, corporates are very complex in terms of production, but also in administration. And you find hundreds of startups who can make a positive contribution how you are to your organization in terms of organizing your production, collecting data, doing, let's say, predictive maintenance in your asset base and so on. So here the philosophy would be, we are, as a corporate, we are the customer of a startup, and we are also investing in this company. And personally, my opinion is that this is not a very far-reaching approach in terms of doing corporate venture capital. But of course, it is easy to prove. If the corporate likes the product of the startup, then of course it's easy to say, oh yeah, now we are investing in this startup because my colleagues, they like the solution or the software that this startup is providing. If that really helps for the startup to have one more customer, I don't know. Then of course the R&D topic is an important one. This also could be the starting point of corporate venture capital, that you sit down not with the CEO or the C-level of your company or the business leaders, but you sit down with the R&D unit and you discuss, what do you want to achieve internally with what we have in place, our R&D capacities, and where do we need outside help? Where do we want to reach out to startups in order to learn more, or even collaborate with startups in order to complement what we are currently doing in R&D? So this is also what I find a a valid approach. And that, of course, is happening in the pharmaceutical industry most, right? Where you know that if you want to deliver a new pharmaceutical product, it costs you 400 or 500 million. And many pharmaceutical companies like Boehringer Ingelheim, they have a program where they spend a similar amount on venture capital, where they say we take certain bets in young companies, red biotech companies who do certain developments, and then we are at the table, and once we see this is working out, we can increase our share. Pre-M&A is something that especially the American tech companies like Intel or Qualcomm or Cisco have mastered in the last 10 years. So here the idea is to invest in a minority first, 10-20% in a young, fast-growing company. And based on your learnings, in the next 12-18 months, you would decide, do I actually buy this company or not? And it's an interesting approach. Of course, it should be communicated clearly that, and it's understood in cases like the companies I mentioned, that if Intel comes in or Qualcomm comes in, this could lead to an M&A. And that, of course, also is seen as an opportunity by many entrepreneurs. So this is something I also see as a valid strategy. Then, of course, you can go into the more exploratory or visionary investments where you say, well, today there are very, very interesting technologies, but we don't know yet how we can apply them to our corporate environment. So we want to be the first who engage more closely in order to understand for our corporate, is there any connection we can build? In the case of BASF, I could mention the examples of quantum computing, where we invested in 2018 for the first time in a quantum computing company based out of Boston. And that basically triggered an interest and an activity at BASF to deal with quantum computing, which of course will have a very significant impact on BASF, especially on the R&D side. Once this works, chemical research will be changed completely. So we found it valid and reasonable and the right thing to do to invest in quantum computing at a stage when 2 or 3 scientists at BASF at that time were, let's say, had know-how about the topic. And today we have a group of more than 30 people who are on a daily basis dealing with the effect of quantum computing on research in chemistry. Another example is space science, where we also start to invest in that space, where you say, okay, today there's not much connection, but we see that as a growing industry where also know-how about new materials will be more and more important. So not just leave it where it is today, that the first rover who just traveled on Mars 15 months ago has battery material from BASF in it, but to open up a bigger opportunity here, which of course always has side effects to other industries as well. So these are some examples from ourselves about exploratory or visionary investments that we have done. And then I think you come a little bit to the core and of the daily discussion. How is our relationship also with the parent company? The new business building, of course, is a very apparent approach for corporate venture capital, that you understand that you have the mandate to find new businesses, and which is, let's say, an ambitious goal. But I think that can be and should be the motivation of corporate venture teams to say, we found something that maybe doesn't fit to what we are doing today, but could be an addition to our current business activities. More often, what you see is, let's say, what I would call an upgrade of the existing business, where you invest in companies or in startups that help your business to transform, to become more digital, for example. We have made such investments where we invested in an augmented reality company. And this company worked with some of our business units to create new offerings for our clients, where we just sold chemicals in the past and did service to these companies. Augmented reality provided a tool to do more, to increase the customer interaction and to generate new business. Business transformation is an example I mentioned before in AgTech, the transformation from a volume-based business into a service-oriented, output-oriented business that we see coming in the AgTech space. And then, of course, the final 2 lines, earning money, I mentioned already. I don't think it's a starting point of a corporate venture unit that a corporate says we want to earn money. Although in the history, it's quite interesting. One of the first German corporate venture capitalists basically was started out of the pension fund, and that was Siemens at that time, who already started to allocate the money of their pensioners, not just to public markets and but also to private markets and here to private equity and venture capital. And then the team said, why are we investing in venture capital? That was the late 80s, early 90s. We have so much know-how at Siemens, why don't we do the venture capital by ourselves? And that was how Siemens Venture Capital actually was started as one of the first or the first German corporate venture capital. So interesting starting point there. But today, as we all know, it's more strategic considerations why you would start a corporate venture unit. And then finally, you see also PR goals or HR goals. PR, of course, we are great. We do corporate venture capital and we are a very modern company. Come to us, work for us, and so on. This is something which you hear very often. Or HR goals that you say, well, when we invest in startups, we also become more agile as a corporate. I don't believe in that, but sometimes you also find that as a goal. And then, as I mentioned before, financial asset management. So summarizing my presentation on that slide, I think there are many legitimate goals why you should start or run a corporate venture capital unit. But I think the most important message I would try to convey today is that it's just important to know what is your strategy. Not just starting a corporate venture unit. Now we are modern and cool, and people wear sneakers instead of leather shoes. And now we also have something like that, but that you're very clear what you want to achieve, because only then you can also communicate clearly within the organization. And that's, of course, the elevator pitch you should always successfully win. If you meet the CEO in the elevator and he asks you, by the way, why do we have a corporate venture unit? You should have a clear answer, and you should be able to answer that question within 15 seconds, or maybe also, if you have a little bit more time, give a 2-minute speech of why you do corporate venture capital. And if you reflect about the background, a little bit, I think this is helpful, because like in many businesses, communication is very important. So it's not just about doing corporate venture capital, but at least as important is to communicate about it. And so your learnings, your insights also will be transferred into the organization you're working for. Thank you very much.